This is Dan Max at EXP Realty, aka the trading agent, and I'm gonna do a little live market chat for Wednesday, October 26th. And the market just keeps chugging along. I'm gonna give it a few minutes. If you are watching this recording or involved with this channel for the first time, I appreciate you checking in. I'm going to set a little timer for 6 minutes. If you're watching this after the fact, go to the 6:30 point. Blech, I can't talk all of a sudden. Yeah, go to the 6:30 time frame forward. Not, again, just gonna chat. I mean, it's pretty boring, and I'm here for folks to answer questions because I think it's not rocket science what's happening here. I mean, anybody who's been paying attention knows that, again, we're probability-based traders. Is Dan always right? Are you always right? Nope, we're not. But we do anticipate the markets the best we can. We trade around our positions. We manage our core. We stick to our rules, and we pivot. Pivot. We're not married to any beliefs. Try to keep them as simple as possible, knowing that we can't know anything for sure. So I appreciate the love, the support, getting a lot of generous donations. Again, the little things matter to me. I don't care if it's only $5 or $5,000. It just shows that you appreciate the time and the learning, because I give it away for free. Again, I do not fear competition. If the markets pivot, we pivot. Markets change, we change. That's the key to this ultimately, is that you have to be willing to change your mind. And the market knows that ultimately most participants won't. So they'll stick into something, they'll mess up, they'll do whatever it takes to blow themselves out. And maybe that's what we can talk about today, is just, kind of the discipline of this stuff, and how my brain, and watching it and observing it, really was the key to growing. It wasn't the market that was the problem. It was just, how I interpret things. We always joke about pocket aces. To me, oil's been pocket aces. But can you lose with pocket aces? Yeah. Yes, you can. It's not guaranteed. This is a probability-based game. Anyone selling certainty and getting excited when they're winning and going nuts when they're losing, and it just goes to show you that they're not really probability-based. They're more ego-based, because the ego gets high and low. We typically try not to. Now, again, if you're happy about trading well, that's good. Just don't let it affect your next trade. Just because you're winning, doesn't mean you're going to win again. It's all independent. It's like, again, I love to make gambling references because it is the roulette wheel. Every time you spin it, oh, it's been black 10 times in a row. It's got to be red. Does it? Could it be green? All these little things. It matters. So, again, if you're newer to the channel, check out all the Back to Basics series. Again, this channel is meant for teaching. It's not great for beginners. I admit that, because again, it's like you got to learn the language before you can speak and understand what's going on. What's up, Drew? What's up, prophetic? Ugh. Again, it's like speaking Japanese. You got to learn the alphabet first. Y'all come on in and ask questions. So, again, I'm not the type of person that's big into call to actions, oh, you got to do this, you got to do that. If this was me and I'm learning and I'm watching and I'm paying attention, the only action I would call people to do is to make sure you set aside some time to study the market. Watch the recaps. And again, they're always in a very similar order. So once you learn them, if you don't want to watch what's going on in financials, well, you skip that part. If you don't care about what's going on in tech, skip that part. Keep it really simple. And the thing that I try to teach people, and you have to remember, is what are the odds that somebody wants to be great at anything in general, and they don't have to spend any time figuring it out? Answer me that. Riddle me this. Riddle me that. Right? Am I just going to show up? I always joke at folks, because I grew up playing sports, and when I play basketball with folks, and you can see who just picked up a basketball and is like, oh, I know how to play. And it's like, do you? Do you know the ins and outs of the game, new positionings, where to be on the court, how to set screens, how to roll, how to do all the little things that help you do really well in general when it comes to anything. So, I mean, it's just, it is what it is. I mean, and again, ask questions. I'm going to kind of float through what I think I'm seeing that's important. I mean, I've said I think this is the hardest thing is like people are like, oh, you were early on the bottom. Well, yeah, I'm typically early potentially, but I'm also thoughtful of what's going on. And one of the things that we predicted was that there was going to be a monster bear market rally. Why? Because it was setting up a huge trap. The best markets moves are when the market's out of position. Market mean participants, small and large players. Keep that in mind. So I think we're in that process. We went from extreme fear that, are we going to get to extreme greed? I don't know. I don't know if I'll be around for it. But I mean, there's going to be a fat chunk in the middle that you can just take. And again, if you're making money, pull it out. Do not grow your account. Don't double your account and then double your trading sizes. No. Double your account. Take 20, 30, 40, 50, whatever percentage you need to take out to pay for taxes, and then live off of it. Again, earn wage increases. Do not, absolutely not make 50 grand and then all of a sudden you're betting 50 grand bigger on your trades. It's the guaranteed way to when you do make mistakes or things go wrong, you're right back where you started. That's why that nugget alone is worth millions of dollars. Most people just do not do that. No, you got to have the biggest trading account. And it's like, okay, well, good luck. Don't mess up ever. All right, let's start it. As of right now, seeing what's going on. Steel D doing things. Yep, Steel's okay. BOC, yep, the Bank of Canada did a 50 basis point rate hike versus 75. I mean, now people are screaming, our feds are going to pivot. Go look at the Fed fund futures rate. They're not. They went from a 3% chance of a 50 basis point rate hike to 6%. Whoa, that's a double. Right? What's up, Thomas? Yeah, I mean, no. The feds are not in the game of confusing the market and doing things. And here is the thing. What do we say? What have we said? The higher the market goes, the less likely the feds are going to pivot anything, actually. Because now they're getting comfortable. Like, they're, like, internalizing, like, okay, market's okay with what we're going to do. Not the opposite. If the market was tanking, now you could think about pivot reversing. Does this make sense? Can I get like at least one yes? Like, again, the market rising gives them confidence. Gives them ultimate confidence that, oh, we can pivot. The market was tanking. This little thing I took from Anna Coulling. Again, I mean, altered it slightly, but it's still great. Please study this. Please absolutely understand it. Now, again, we don't all have to agree on what is going to work and what the trades are, but just, I mean, this is like the 8 rules that are just always, because they don't apply to any particular stock. It's the mechanisms of the market makers at work, the operators. You know, someone was, I can't remember who it was speaking about it, but they were like, oh, the market has to go higher, and it's like, or ENPH has to go lower. Think about how the market makers want the stocks to move. Our opinions, and I love to rehash this. I mean, we can sit around and create fundamental stories and all sorts of fun stuff. You know, bust out the campfire, get some s'mores out, chocolate, and then some, whatever those cookies are, graham crackers, and let's talk about fundamental. No, it doesn't matter. It doesn't matter. I mean, that's the problem with the brain, is that like it's always trying to create certainty. Our brains were evolved to try to certainly figure out how to live in the planes of whatever your culture is. I mean, think about our brains. Like, they want certainty. Why does it have to, has to go there, has to go. No. Probability based. And the problem with fundamentals is that now you're creating this story of why this has to happen. Again, we create stories here and narratives because we try to anticipate the news. And think about it. This isn't from my perspective. Do y'all get this? It's like 20 years of studying this. This isn't me just going, well, Dan thinks this is going to happen because Dan wants this to happen. No, our goal is to know the market makers. And these are the rules. It's 8 rules. I mean, I don't need to read them. Hopefully you can pause it and read this stuff. But it's, again, that's the goal. It's to think like the market makers. It's literally to know what they want to do. Because your size, my size trading, I mean, again, I make the joke, it's a fart in the wind. Doesn't matter. But everybody's selling certainty. Nobody talks about what the real, and again, that's usually how life works. The real answers, and again, even the real answers, you know, someone can interview LeBron James, Michael Jordan, Derek Jeter, name your favorite athlete. Hey, what makes you so great? What gives you that edge? And they'll tell you, but people can't execute it. Well, here you go. And this is what our goal is, to make ourselves better traders, to think like the guys and the gals that are running the market. We want to anticipate what they're trying to play, the game that they're trying to play, not what we think. You, me, everybody in this court. Again, we have opinions. We have beliefs. I mean, you could be left, right, center, whatever. It doesn't matter. So know these rules. Think about the specialists. That's why I'm not like, people are like, oh, I'm lining up the short. I'm like, we just went from like extreme fear to like moderate greed. Now, near term, I mean, I'm not surprised if things chop out. That would make sense going into GDP. Again, it's good news, bad news, good news. I don't know. Do people want to take profit in front of the GDP? Maybe. But there's certain things that I'm not giving up, and those are the leaders. And again, I sold Netflix, and I was like, as soon as I did, I'm like, that's a damn leader. Dang it. But, you know, put the money in other things, more so oil, little CF, little NTR, little XBI. Just keeping it real simple. I mean, people are like, oh, you should be taking on more risk. No, I don't want to take on more risk. I want to stay with the stuff that I feel like I don't have to worry about. You know, someone's, you know, what's his name? You know, if you're here shorting ENPH, I'm like, that just feels like putting myself in purgatory. I don't want to watch things. I don't want to sit around. I don't want to be nervous about my holdings. If you own tech, you're nervous as hell. If you're own tech, you're seeing a lot of price option decay as IVs come in. If you traded it, cool. But if you own commodities, I mean, you're sitting here going, feels pretty normal to me. And again, the narrative is that the Feds, to pivot, will need commodity prices down. But the problem is that now that they're bringing risk back on, commodity prices will rise because nothing's been fixed. Nothing. Zero, zilch. Doesn't matter who wins the midterms. Not going to matter. The guy in charge is going to be blocked. Both sides are going to be stalemated. Don't anticipate much. All right, let's get into some names. If you got questions, please interrupt. I really don't mind. Bitcoin, what have we said? Waterlogged. But then also, what do we say recently? Like, it's holding up. If you're long it, you probably had endless months to buy it down here. Cool. Getting over 20,000. Things that aren't bearish. Now, how high? Hi. Hey, Tally. Can it pop? I don't know. It just feels like gold. You know, what's the upside? Because the Feds aren't pivoting. I mean, 22, 25. I mean, good returns if you're in it. Is it the safest? Doesn't seem like it has much downside because it's clearly whoever sold has sold. So that's where it makes sense for the markup. Oil. We talked about it. Head and shoulders, knees and toes. Once we got over, and then we basically, again, keep in mind the gaps don't really make a difference. Once we got over this 86, here we go again on my own. Just keeps, again, this is oil. You cannot get me to sell oil. I don't care. I mean, that's the one trade I will not be unloading. Because it's a head and shoulders bottom breaking out with nothing fixed. And if the Feds are going to pivot, guess what? Everyone will eventually pile into the strongest stuff. Right? Let me get off of WTI. You can see what we were looking at, 82, 83. Here you go. Support equals resistance. First one's going to be 93s. What makes sense? What will be the headline? Does anyone want to take a guess like how this will play out? Like what will be the headline that gets the market a little freaked out about oil? Anyone want to take just a random guess? And again, not really having to be, like, we can't anticipate geopolitical, but think about like a price headline. What number would get people to go, uh-oh? Feds go, uh-oh. Anyone want to take a guess? What's up, Joe? Good afternoon to you, man. Well, it's 10:40 here in lovely Denver, Colorado. 95? Nah, think higher, man. Yes, there you go. $100 big round Hyundai. Hyundai oil. Oh my God. That headline will draw in all of the bulls. Do we not agree? That's when you start hearing, oh, well, I don't know if y'all remember this. I mean, again, the channel's grown exponentially since I went public like a year ago. In March, do y'all remember how the headlines for $200 oil, $250, $300 started coming out as soon as this thing broke up into like the 130 range and was near the top? Do y'all remember, again, thinking of the market makers, what's the best way to bring in all the suckers? You got to like advertise some amazing price target that's much higher. Anyone remember that? I don't know who's still in here that was around in February, March. Then we talked about May, like this retest. Everyone's going, "Ooh, we're going higher, 150. You can smell it." And it's like, you're smelling turd, my friend. That's a double top trap, because that's just how it is. I mean, think about it. The market makers want to convince everybody to buy oil at the highs. You got to be nervous as crap. Just like the thing. I mean, like, how you know the market's going to be topping? Well, I mean, again, I all the intraday traders and the technical folks who are just all or nothing, all in and out, that's good luck. I'm pretty sure it's going to be like it always is. At the highs, with the market, everyone's going to be like, oh, the bull market's back on. It's all good. Everything's fixed. I'm talking like Mickey Mouse. Everything's fixed, guys. I'm a clown. Ha, ha, ha. I'm a mouse. No, I mean, that's the thing. That's what they're going to convince you of. That's basically what the rules are telling. That's what we're always trying to learn. Now, how you interpret that, what day, what minute, what month, I mean, we'll see. I mean, I've said this, and I'll say it again. I think 99.9% sure whatever the high is in October will retest in November and probably go higher. Just keep that in mind. Seasonal, the way that the feds are manipulating the headlines, the way that the market is acting, like, you have to remember, there are a ton of people who are chasing. Ton of people chasing. Herman, shouldn't the VIX go up significantly down in November after important event past Q3 earnings, GDP? I mean, significantly? Yeah, we've talked about this. Let me show you. I mean, again, watch. Please mind the gap. No. Yeah, but again, you got to be careful how you short the VIX. You know, I just short UVXY if you really want to short VIX. It's the easiest compounding piece of crap out there that just decays. We talked about, once you broke the 20-day, game over. This gap could fill. Do not be surprised. The gap could fill. Next support going to be in the 26s. My biggest thing that we keep showing is, like, if you studied the past and you are a trader from previous decades, you remember 2008. Like, we had this, like, consolidation of higher highs, higher lows. Then then like this last pow. And the low was what, 2050. You see this on the monthly? Let's go back to the daily. Where's this gap? 2075. That's pretty good. Again, we'd like to look for reoccurring patterns. This is why I keep telling them, like, you got to be careful being bearish here. Now, I know certain things are acting funky intraday. I mean, money rotates. One day, CF's up $5, $4. Next day, it's down $2. One day, natural gas is up. Next day, it's down. I mean, you got to pick and choose your battles wisely. Maybe the best way to describe it. But at this point, I'm not surprised. Like, the market is taking some profits. Talked about it. If you wanted to take some, great. Did not add anything today. But I mean, personally, you want to see down in front of the GDP number. Why? Shakeout. It's a shakeout. Like, that's what you want. Like, again, I hate. Remember, what's the first direction in a trap is usually the side being trapped. If the market rose into the GDP numbers, I'd be a little concerned. Now, flatlining, chopping today. I mean, QQQ is clearly not going to bounce back. I mean, did it go green? I guess I got close enough. Could it? No. But the irony is, what the VIX is closer to the lows as the market's pulling back. I mean, it's telling you a lot. It's telling you a lot. Remember, this is a 15-minute delay. I think with Q charts, if I remember correct, right? Yeah, it is. It's 27.57. Still, not really significantly different. Again, I already pay hundreds of dollars a month. Why don't they give this stuff for free? It just drives me nuts. Or not for free when you pay for all these different subscriptions. They try to, like, lure you in. It's like cable television. They're like, oh, but you need this package to get that. But if you want them all, just you're going to have to pay for all of them and pay $1,000. I'm like, man, I don't need that. I don't need that. Oil. So let's look at the USO. People are like, what's your price target, Dan? Well, would we not agree? It's going to be somewhere over 76 minimum. $100 will probably bring you back into the 80s. Give yourself time, please. Don't anticipate this happening in one day. That shit drives me crazy. Just, it's getting there tomorrow. I'm like, no. XOP, some people are talking about owning this, and it's like, I see why. No difference. Just like in May when you had the blow off in the market, bear market rally, this stuff, the leaders are led, hence why I'm like, stay away from tech. I mean, if you have to trade it, go right ahead. I just, I don't want to carry tech very heavy because there's always a bad headline coming. Nothing bad can really happen to oil other than the market dumping. That's why these names seem safe. Oh, but Dan, safe. You don't know such thing. Well, okay, we'll see. I mean, you're getting back up near the top if you want to take a little profit. I mean, that's a nice run, 114 to 150s, but I still think if oil rises, people are going to get stupid. They're going to pile into what seems to be the strongest. And I'm telling you now, the best way for the feds to get stuck with their hand in the cookie jar and not be able to pivot is obviously with commodities rising. I mean, they're screwed. They're screwed. And the market, again, if you think about the 70s, 2000s, like combination bear market, it's going to be volatile. The eventual bottom is, who knows? I mean, this could be years. And a lot of people are not prepared mentally for that. Hoi vey. SPY. Over the 50-day, I mean, we talked about this being a bear trap. Opens, closing. I mean, 385. I mean, do you really, this is the thing. Do you want to predict this? I mean, because this is where the options folks go, well, I see the option pinning and this action is, and it's like, yeah, okay. I mean, I've seen that right definitely a lot, and I've seen it just as wrong. Because again, the markets, you can't chart emotions through options, action, and just the charts always. I mean, that's the hardest part here. Because again, if it was just so easy as to charting or just studying the options chains, everybody would be winning. Can we not agree on that? If there's anybody listening, or if I'm talking to just Jesus, hey God, or whatever God you believe in, sweet baby Jesus. Does this make sense? Like, there's an art to this. There's literally a video I talk about this. Like, there's an art to trading, because if it's literally so technical only, everybody could win. Think about it. Institutions that spend hundreds of millions of dollars still win at an 80-85% clip. Why can't they always be right? Because there's a certain part to this that isn't just predictable. Then you can't just go out and look at the option chain and go, what's got to pin to that? What happens if all of a sudden China invades Taiwan and and the market doesn't see it coming and they don't tell anybody, and boom. Oh, it saw that in the options market, maybe like minutes or hours before, but I mean, we'll see. I mean, all these little things. I mean, does this make sense? Like, there is an absolute art to trading, because if it's all charts and just all knowing of certain particular things, there would be people absolutely killing it all the time, and they're not. Again, what's the success rate of traders? 95% fail. So that's a 5% survive. 1, 2, 3% actually just do really well. It's not that easy, folks. And I'm not trying to be, what's the word, like, just crap on people's systems. I'm like, you gotta just not trust that everything is perfect and easy. Oh, I did this and I did that and I studied the RSI. I studied the MACD. No. Yeah, don't use a ruler in trading. I mean, I say all these things all the time. Like, try to be evidence-based. Like, take your brain out of it. Like, if I look at this action, 4 days up, opens low, chops up. If today just chops around, is it bearish, bullish? I mean, everybody, keep in mind, how do you quantify, like, emotion? Well, bear traps. That big candle, that was a monster bear trap. It resolves what? Higher. You've seen this before. This isn't a new game. Now this one pulled back and failed at the 20-day. But look at this one. We got over the 20-day and held. I don't feel like, again, seasonality, the midterm election kind of money flow that they talk about is convincing people to do what? To get long. And they feel like they're missing out. Oh, the market's 30% pullback? I got to buy that dip. And I'm going to stash it and disappear. That's how it works. I mean, think about it. Like, they're going to convince and get people to rationalize. I just got to hold. And we know that's what their game is. At the lows, it's to get everybody to puke. And at the highs, let's just hold on forever. What are the price targets? 390s. Maybe the 415, 410. Maybe channel high. If you're a bear, take heed of this. The higher it goes, the better. Again, the more out of position the market gets, the bigger the downside potential, right? You got to remember that. You just got to remember that. Anyway, any other questions, thoughts? I mean, what's CF doing? Oh, low of the day. You dirty, dirty dog. Chop, chop, chop. Consolidation. I mean, it feels like I'm looking at USO 2.0 oil, right? Look at this chart. You know, like a head and shoulders. You can see it, left shoulder, right shoulder, head. Just chilling. Where are you at? USO. Left shoulder, right shoulder. And again, remember, don't look at this area, but think of it like a chilling, like a consolidation point. Once it gets over it, it goes. Keep it simple. And again, just have stops. If you were buying this stuff down at the 20-day or maybe even down in this kind of action, congrats. Just, you know, every day. I mean, this is what drives me crazy about day traders is they'll look at the action and go, it's bearish. It's bullish. It's bearish. It's bullish. It's bearish. It's like, what's the trend? Oh. Higher highs, higher lows. Again, I don't know when it resolves, but again, I mean, this is the thought process. You know, take your profits along the way, buy dips. Fear and greed index has just entered greed area. We're getting closer. I mean, I doubt that we get from fear to extreme greed in a week. Right? Like this, no one believed this. 4 days? Man, I doubt that. I doubt that. Now, again, don't be surprised if the GDP data, as we said, is going to come in positive. It's going to look, they're expecting 2-point-something% GDP going from negative. The recession's over. If you see a dip on the recession is over, do you think all the money, what have we said? What, 6-7% of, like, what percentage of the money is sitting on the sideline? 6-7%? That is a big amount. Historically a large amount. Do you think that cash is not going to go, oh, recession's over, we should buy some? Keep that in mind. The amount of cash. Let me see if I can throw that onto the Discord, onto the chat real quick. Give me 2 seconds. Give me 2 seconds and I'll show it to y'all. This is concerning. Now, again, temporarily, at worst case, right? But you got to think about this stuff. Where is the cash level? Here you go. I'm going to open up. Let's get it. This is not good for bears because it's going to provide support for the bulls, at least near term. Because again, look, it can get extreme. No one doubts that. And then it come back and still go lower. December 2008, all these times you had lower lows later, potentially. Or it wasn't. I mean, it's again, probabilities. When you see 6-7% cash levels, I'm telling you, this dip, and again, it's pretty obviously predictable. And we talked about there might be some weakness, and you prefer it. We talked about if you want, take some profits on the ride up. I'm not really doing much of anything. Again, I don't own crap, and I don't trust tech, so I'm not in it. Remember, I dumped it all. It still went higher. I mean, nice trading on Tesla and Netflix. Did not try to chase crap tech. But this to me isn't fear. I don't care about fear and greed. This is cash. And the best advertisement for higher prices is what? Higher prices. So now that we're in like the realm of people calling the bottom, right? Do we not agree like everybody, Johnny, Johnny Knoxville calling bottoms. That's it. We talked about the first dip should get bought. Well, okay, well if it's a bear market rally and not one of these smaller ones, then it probably gets bought in rallies. We'll see. I mean, again, if you want to short, you go right ahead. I'm just going to trust the almanac and some of the things that seem likely to me. High cash levels, the VIX getting crushed, seasonality, November, the Fed's priced in. Again, they might even say, we're going to think about our future rate hikes because they're, comfortable with the market. But then what? Oil. Take notes of this stuff. If you're not because again, if your brain is floating around in this ether of stimulus and it's starting to think different things all the time, try to stay with the evidence. I'm telling you, it's much easier. So the market pulls back. Cool. What's the TLT doing, right? I mean, we talked about this. You want to see rates not continue to what? Go higher. Well, now they're coming down a little bit. Where's the 20-day? 20-day, 20-day, 20-day. It's the 20-day, approximately. Again, big round number, hundo. Probably 99. Dollar. I mean, fear and greed. I don't give a about the fear and greed index, right? If the dollar making lower highs and then starts into this drop, what's the fear? I mean, again, cash levels are high, fear and greed, but none of that matters. Let's be a little more evidence-based. Other than, again, I agree, fear and greed matters, but I don't think we're at extreme greed. Extreme greed would probably take us up to 415, in a flash. So, again, if you want to trade, that's your thing. You're always trading. Go right ahead. I hate trading because sometimes what happens is I get distracted. I get what's the best way to try it. I'm not around. I might miss something. If I believe the trend is higher, my best goal is to try and figure out a core position. And that core being, let it run. I mean, people don't realize when I first started trading and I would give out advice and I'd be like, hey, check this out. ABC stock. And I'd give people a tip and I'd be like, and this would happen all the freaking time. They'd be like, thank you. Hey, so much for that tip on oil. How did you do? And I'd be like, yeah, I traded. I made a point or two. And they're like, you made a point or two? Yeah, I was trading it and then I missed out and I just, I didn't want to chase it. Oh, we bought it, and then we made 30 points. And I would hear this all the time. And it started making me realize, well, no wonder I get antsy and I overtrade because I'm trying to predict every single intraday move. The people that do that don't realize, they're your own worst enemy. The market maker is creating the games within the games within the games. I mean, it's hard enough to predict the bigger trend. You want to try to predict the intraday action? By all means, go right ahead. Go right ahead. Because you're going to find out pretty quickly that the 6.5-hour trading day is meant to be a distraction from the bigger trends at times or meant to be consolidation patterns within bigger trends. All the inflection points, every day is not the inflection point. Right? You have to think about that, right? Every day isn't the day to go short and start the downtrend. Every day isn't the day, you know what I mean? You need to see the evidence build. And usually that creates potentially being early if the evidence changes and we pivot. But think about Livermore. Don't be in a rush. Don't be in a rush. Because what do we always find out? It doesn't happen when we think. But the same thing with a trend. When he has winners, what's his best thing? He's like, oh, I made more money sitting on my hands than doing anything. It's true. I believe it. I've seen it. I've witnessed it. I've been trading for that long. When you have a winner, now again, you got to be careful with the volatility a little higher in this market action. But when the evidence doesn't say anything other than consolidation or chop, this is why we stick to leaders. All this stuff, again, study Livermore work. It matters. And again, I hope one person gets that nugget. There's a reason why you can hold comfortably leaders. There's a reason why you lay off laggards. Oh, but I need to short this and I need to do that. Okay. Again, you want to do the hard thing, then guess what? You're going to be more nervous. You're going to be more emotional. Do y'all see that? Does this make sense? Can I get 5 yeses? Again, you trade harder trades. You're naturally not going to be you're going to be easily shaken. You buy Google calls at the open, which I screen. Please don't. Oh, it doesn't rally back. Okay, well, it's a laggard. No one cares. Everyone knows Google's numbers. Whatever. It doesn't matter at this point, right? It's just junk. Now, could it rally? Yeah, I mean, junk rallies in a bear market rally. But do you feel better about owning Google or oil overnight? Do you feel better? And again, people are like, oh, you're missing out. I'm like, you know what? I made some money someplace, but I sleep way better at night owning CF, XPI, NTR, USO, SPY, and IWM. I feel like they'll come back. But you tell me that I need to buy Microsoft, Apple, Amazon, Meta going into earnings? No way. Do I know how they'll react? No way. Do I want to try to pretend that I know the news? Actually, you can know the news. It's that you don't know the reaction. And since we talked about the first mouse gets the trap, second gets the cheese. I mean, used to know accountants who'd be like, oh, I'm working on this project and the numbers are looking good. Oh, cool. Thanks for telling me. Stock dumps. Oh, they're going to miss their quarter. Oh, really? Stock pops. I mean, again, we don't know the reaction. But the ego's trying to like lock in to certainty. I mean, it's pretty incredible. And again, there's 20 people watching this, and I'm amazed how like the people who stick to this, I mean, you're gonna learn from this. And I mean, I'm trying to explain it to you, but when people who've been around seem to make the same repeating patterns of mistakes, don't blame the market. You're just getting, it's like, give me an example of what your favorite sport or recreation is, and let's like break it down. Who wants me to explain it and give analogies to that? Because I think this is how people learn. Like, what's something you enjoy? Maybe it's a video game. Maybe it's a freaking board game. Maybe it's a sport. Maybe it's anything in life, like a hobby. How do you improve? You learn from the mistakes. But you analyze them, right? You don't do the same thing over. Like, you're playing a video game. I just remember playing GoldenEye 007. And I can't remember, it was like one of those cave boards. And every time you popped up, you immediately had to move out of a spot to get to a certain spot. And you always wanted to get like the rocket launcher. And doing it's like, yeah, you learn from all of these mistakes. I mean, it sounds silly, but remember trying to play it online with friends. It's like instantly, the people just murder you. You get destroyed. It's like, all right, well, don't blame the players. Understand the game better, right? Like, there's certain little things about the markets, which I just don't think people, like, again, they want to, like, chalk this all up to randomness. Oh, well, it's got to do, I don't know. And it's like, no. Your first concern is always what you can lose, not what you can make. You can't always make back your losses. But you don't go broke on gains. I tell you that. I mean, that seems so logical and obvious. No crap, Dan. But do you want to gamble? I mean, that's the question you have to ask yourself. Like, what is your probabilities? Do you want to increase your gambling, or do you want to increase your likelihood of winning? Because when you stick to safer things, guess what? You can go larger. Okay, well, you still can lose, but the odds of getting wiped out are not as high. I mean, people keep asking me about Chinese stocks, and I'm like, go right ahead, trade them. But I would be scared crapless that you wake up overnight and NEO gets cut in half. I don't think any of the names I just talked about will wake up and be gone and cut in half. Worst case scenario, 5% loss maybe? I don't know. Does this make sense? If not, I'll explain it more. But ask some questions here, because at this point, I'm going to just head out. There's really not much to say. Not surprised the market pulled off. People say, oh, it's going to hold 385. I don't know. Again, I don't really care about the intraday action at this point. I think the trend is higher. We don't know you got, so earnings coming after the close. You got AEM, EQT, and Meta. Tomorrow, you obviously have the GDP data in the morning. You have CCJ, CAT, and McDonald's in the morning. Afternoon, you got Amazon, Apple, X. Yeah, so it's going to get choppy. All right, I got some comments. Tinder hot, XYZ, best adult dating site. Awesome. I get the thumbs up, the heart, the check mark, and the couple. What is your question? I mean, if I get, man, this is awesome. I love getting spammed. Because if you're following me, you probably got a question about the markets. You want to know about Match.com? No. So let me ban this stuff real quick. So sad. I mean, whose existence is to do this stuff all day? Do you think, I mean, is there anybody in here who sees this and goes, hey guys, I need Tinder hot? Oh man, you've marketed me well. It's like watching a commercial and it's like geriatric stuff during like kids' cartoons. It's like your marketing's bad. If you're targeting me for Tinder stuff, not good, man. Took off position in TNA when I didn't hit on 50, 150. Oh, maybe early, but cash in the pocket. Again, you can't go broke. Profits. I like the IWM. I mean, how do you? I mean, me personally, I mean, it leads. I mean, I don't see anything saying it's a sell at this point, but we said 50-day would be your first target. Well, guess what? Now it's looking like 200 target. Just again, but taking profits. Oh, Jesus. Jesus Cristo. Taking profits is not a problem. It's just people dumping their whole core. Oh my, no, I did really mess that up. Yeah, you got to be careful. Let's change it. I don't know what I typed, but it clearly was, you're an idiot. 200-day target. I mean, it seems likely. I mean, it was previously. And it also, 187. Someone was asking, yeah, it makes sense. 187. Why am I 200? Come on. Reload. There it is. 200's been support at times. Resistance previously. Again, we don't know the exact high. But we also don't know why the market's rising. Sometimes I always tell me, like, you don't know the why till after. That's the problem. Buy the rumor, sell the news, right? Do you see rates going lower in the election? Yeah, Waxon Danielson. Do the rates look like they're going lower into the election? I mean, here, let me dig into the rates for you real quick, my friend. I'll tell you my story on rates. Talk about pivoting and just having to like give up. We thought rates would, we thought this would be like the bottom. Got blown out, rallied back, then started a precipitous fall even lower. If I believe commodities are going higher, do I want to buy bonds? Can you answer this question? Simply. I think the answer is obvious. The obvious answer is what? If commodities are going higher, do I have faith that bond yields will go lower? Especially with the Feds not buying bonds. How do we feel about it? Yeah, no. But oversold. I mean, we talked about liquidity being high on OPEX Friday. In a, again, oversold's relative. But we talk about, like, once you get straight line move and end with gaps and you had double dojis, I said, watch the double doji. Again, if you want to make 3%, 92 to 95, 97, I mean, again, if the rates are going lower near term, I'd rather play, it's like Chinese stocks. Like, at this point, I don't think the bond market is really pricing, like, going to the moon. So if you want to trade for a couple points, it's cool. Is it going to go, rate's going to go lower in the election? I mean, I feel like they already started going lower. So that's a yes. But how do you want to trade that? Like, one of the things about bonds, let's get into this because this is a good question, good topic, and then I'll see if anyone's got anything else. I'm kind of talking to myself. We're at important zones. Oh, good question from Truth B. We're at an important zone. We all agree that. We probably went a little below it. 97, 98, maybe 99, 100. I don't anticipate getting over the 20-day, but here's the thing about bonds and most bottoms. What do we talk about with bottoms and tops? Does anyone remember? I like to quiz people and see if anybody's who's listening pay attention. Do you expect V bottoms and V tops? Ooh, sorry. No. I'll just answer the question. Stupid latency. If this is the bottom, there's gonna be some sort of back test because this is the hardest thing about people trying to pick bottoms. And you know what? Let's layer this back to even anything else that's at lows. You have overhead sellers. Do we not agree? SSF, everybody listening? Yeah, retest. People are stuck in bonds. Any positive move, like, what is the likely happen? They're going to be like, ooh, I need to, crap, I need to get out of this. Not, oh, it's all in, time to go higher. So you're probably going to get some sort of retest. Do you get a lower low, higher low, equal low? I don't know. But I don't, you know what I mean? Like, I don't, this first bottom to me, it's kind of like when I talk about like laying off gold and certain things, like, it just doesn't really, that doesn't excite me. Because there's going to be so many people that are like, oh, we were told to buy this, and just got murdered. That's why it's, for me, easier to buy something like CF. Because there's none of these folks above going, I'm trapped. I got to get out. No. There's not a lot of those folks up there. It's the same thing with oil XOP. Like, I know there's oil possibly, but XOP, like, there's no one up here. Other than past, and again, if you go look at the monthly, way, way back in the time machine. But no, I think you just are at this point where you lay off the laggards, you expect retests, you expect choppy and sloppiness. So it's a good question. Got to be careful. All right, Solomon, here we go. SPY can't break 390. I mean, I literally talk about retest all the time and choppiness and action, and the guy thinks everything hits straight lines. Is the market a straight line moving mechanism? Always. Solomon, are you listening? If you are, I'm talking to you. Is it a straight line moving mechanism? Even the tops get a little choppy, right? One day, I mean, I remember, again, if you're familiar with TraderFlorida.net, studied under him for a little while, and he used to say this: one day doesn't make a trend. Cement that into your brain. One day doesn't make a trend. Most times than not, the bottoms, the tops, whatever, one day ain't going to be the top, ain't going to be the bottom. And if it is, guess what? You're betting on the low probabilities. Does that make sense? All right, let's roll on one more. Again, I love helping people when I'm not busy. Gives me an excuse to just hang out and watch the markets, but also be productive and like actually help other people. Hey, if you get a chance in today's recap, could you talk about the balance between building confidence and not going too far with said confidence and beginning to go on tilt, revenge trading, versus I know I can get back some of it. I know most of the trades we discussed are long duration, but even then with those, I still work on a balance between a good R&R versus missed opportunity versus pressing it harder and taking the opportunity to market and providing. This is all mental. This is all mental. This is all looking for the answer. Let me type this real quick. 48-minute mark the live chat at Truth, because I want him to hear this if he's not listening now. This is all trying to figure out certainty, right? Like, what is the correct answer? What you believe, what your brain's going to interpret. So how do you present yourself and know when to press hard and when to act? I mean, that's a great question, but let's review the SPY. We talked about this being a bottom. We said the first dip gets bought, right? The first dip is going to get bought. 20-day. You press here hard. Now, again, do you know for sure? Nope. Nope. But do you have stops? Yes. The only thing you can be certain of is your risk management. And I think that's the hardest thing for folks. They want to believe that I need to be perfect on my predictions. No. If you can be perfect on your risk management, you're a better trader than me then. If you can absolutely hit 100% risk management and execute every time that you're wrong, like if you can focus and that be your focus, better than me, man. Better than me. And that's always the thing I'm trying. Like, are you trading well? Because if I tell you for certainty the market's going to 395, okay, well, it's obviously not certain. That's the probability thought process, the next resistance. Well, how do you trade it along the way, right? That's the layer in, layer out. You know, the ego, revenge trading or chasing. You got to be careful chasing, because what happens is when you chase, now maybe you got rewarded these 3 days. Well, now you're going to think that's okay. You got to be careful with that, because that's the thing. Like, when you start chasing, now the risk reward gets what? Skewed to almost a coin flip. Do you go big on coin flips? Should you go big on coin flips? No. People are like, last week I was pounding the table. Watch the recaps. I mean, people remember. I'm like, you got to buy this with stops. Like, oh, but then what? A narrative, a millionaire. I don't care what you're saying. Oh, China, Hong Kong, all this crap. I'm like, just watch the levels. Oh, but you're close. Okay, well, watch the June lows. Noise, noose around your neck. Ah. No, just watch the levels. This is how you don't go on tilt, because you get in the mindset of like, all right, well, I can be wrong. I'm not sitting here going, because again, once you start believing this attachment of being right, the irony is it gets much easier to be wrong, right? Like, the wise man, wise man learns from others' mistakes. You learn from your own mistakes. Great. But the reality is, like, do you know everything about the markets? Stop telling yourself you do. I mean, I'm amazed in the Discord room how confident people are in certain things and narratives. And I'm like, you, me, we're all just peons. We don't know diddly squat about what's really going on. Why is the market going higher? Well, I believe it's going higher. Shut up. No. Again, that narrative doesn't make sense other than what you want it to believe. Oh, well, Dan, you said your narrative. Again, my narrative is just trying to believe what the market maker is going to do. So, do you see the difference? It's not what Dan wants. It's not what SSF wants. It's not what Truth B wants. It's not what anyone who's following. No. It's what the market makers want. That's what I'm trying to figure out. Do y'all see the pivot and mindset this is? It's a totally different thinking. Oh, but Snapchat, it's a piece of junk. It's got to go lower. This, that. Okay. Why? Well, I believe this. The fundamentals. Okay. Well, then it rallies like 20% off the lows. Well, I want to short it. Okay. Well, why? I think Well, if you were the market maker, what would you do with Snap? It's just, I don't know. I mean, I talked about it. If market makers need liquidity, guess what? They got it. They shorted this mother at many higher prices, and now the liquidity at the low. Oh, and it's rising. You want to short that? I would wait. I would absolutely wait. They got the liquidity to cover into. Nice trade, market maker. You just made like 90% from the high shorting this thing. Oh, but I need to short it down here. What story are you creating to tell yourself this is the best trade? It's a piece of junk. It's going out of bid. Okay. Cool. Cool beans. Cool story. Are there better shorts? Oh, but you said trade laggards. Yes. But do you see liquidity in the action not rewarding people who've been short since earnings? Is that clear as day? Everybody who's shorted since earnings is doing what? Getting a mouthful of losses. Oh, but I got to buy. All right. This thing is down so much. Leave it alone. Better things out there to short. Your downside is 9 points. I think you can find 9 points shorting a lot of other stocks just as easily without the headache, knowing that the odds of this dropping are probably just as equal to other stocks, but at least you don't have to worry about like the liquidity action giving the market makers what they need to cover into. Does this make sense? Again, I mean, it's the same thing as chasing stocks at highs. Do y'all hear me talk about chasing stocks at highs? I'd wait for a base. If you want to short Snap, well, then you're probably going to what? Need to wait for it to pop. Well, where's resistance? Probably looks like in the 11s. Maybe it's 100-day. Maybe I don't know. Again, the stock is just not even on my radar. When someone's like, oh, I got to short this. I'll go through some of the other recent ones that people talk about. Coke. People were like, oh, I want to buy this. Want to try? Okay. Earnings are coming. Good luck. It's not really a leader, but hey, if it pops, awesome. You have to wait for earnings. Well, Pepsi did well, I guess. Yeah. I mean, but is Coca-Cola the stock of dreams are made of? No, it's the freaking Buffett covered call dream made of stock. So it's like it's just going to go nowhere. If you want a couple points, awesome. Would I short it? Would I go long it? No. I mean, it's the same thing. Like, just, I don't know. Well, Pepsi did well. Yeah, and it rallied. Then it hit the 20-day. I was like, oh, well, you're going to have to wait for earnings. Well, we don't know earnings. I don't want to, again, take yourself out of earnings. You do not want to hold to it because you never know what's going to happen. The CFO is going to leave. Counting scandals, missed numbers, whatever, redo their numbers, mistakes, need to raise cash. You don't know. You don't know, right? Let's pull up ENPH. Again, like someone's like, oh, I want to buy puts. I'm like, all right, till December. Okay. The market's rising. Do you want to short this? Because it feels like a professional gap. And if think about it, if you're the market makers, if you are the market maker, do you want it to dump today? Just ask yourself that. Will that be the best way to unload all of your shares? No. No. It's, they talk about the 3-day rule. I mean, if this is a professional gap, here's the same formation. I mean, it's amazing. No one ever looks left, but whatever. I'll do it for you. Doji. Then it continued to climb higher. We'll see again. The day's not over. It probably closes in the 290s. But, yeah, if you want to buy, and this is the thing, like buying December puts today when the IB's high, I don't know. Again, I mean, 99% of the trades that I see I would not do because, again, I don't think people know their own odds. And, again, if they win, they win. That's great. Do the market makers fully control price action? Are they omnipotent, or are they just participating who sometimes lose and go broke? No, the operators don't go broke. No, the market makers, like, think of the casino, Herman. Think of when you go to a casino, someone's taking your bets, right? Do they always win? No, but the odds are in their favor. The way the game's played, the way that they rig the game is to make you lose. So that's where we talk about, like, there's operators and market makers, and then there's just as many retail participants and large money participants that are not the same amount. Like they're just as stupid, if that makes sense. They're just as dumb. Large participants, short, like small participants. I mean, there's big institutional money that is idiots. Do you think the CalPERS are smart investors? Do you think, whatever hedge fund institutions, money managers, they're all great? No. I mean, great is relative too, because again, it's all about who can pivot. So, that's why I think about, are they omnipotent? It's their game. It's they know the odd, like they know the market's going to do certain things and repeat patterns. That's why I always tell me, like, play the guess the next candle game. Look at the repeating patterns. It's not like there's some sort of like hidden messages in the charts. Like Dan's using tarot cards and moving around the Ouija board going, no, what is it? No, it's like, all right, this is what they usually do. It's a repeating pattern. That's what Livermore talked about, repeating patterns. Price action, volume, it all matters. It's just everybody else is focused on like their beliefs and thoughts versus going, all right, well, let's look at the evidence. Well, what's the evidence? Yes, more spam. How do I get this person to not be able to spam? Apologize. But does this make sense? Like, we don't believe in like there's an omnipotent force that's always correct. But we do believe in what? The casino always wins. The casino always wins. Does this make sense, Harmon? You have to think about what the odds, what the games are, and what they're trying to do. Look at that meta low of the day. All right, well, who knows? Tech kind of pulling back. What's USO pulling back? We'll CF flat action. Yeah, I struggle with tech. I don't trust it. Every piece of news seems to be negative on it. Everything that affects commodities should push it higher. It's just, is it that hard? I don't know. Good question, though. Because you guys have to be very thoughtful. Always be very thoughtful, right? Like, what does the market maker want to do? Okay, so what are your objections to the market maker? Then what are your objections? Like, what is it based on? What evidence? What is your argument? I don't mind having a friendly conversation. If you got a minute, like, type it in. In the casino, the owners can set all the rules, and the market's control is limited. You can manipulate the masses, yes, but not always. Oh, really? Interesting. Okay. Well, I mean, again, this is why I point people back to this over and over. Here are the rules. Here's the casino rules. Here are your rules. Manipulating the masses is part of it. Here are the rules. I mean, it's pretty simple. As merchants, specialists will expect to sell at retail what they have bought at wholesale. Makes sense. Buy low, short, high, whatever. The longer the specialists remain in business, the more likely they will accumulate to buy stock at wholesale, which they will want to sell at retail. Yeah, the more inventory they get, the more liquidity they have to unload at some point, right? The expansion of communication media will bring more people into the market, tending to increase volatility with stock prices as they increase elements of demand and supply. Yep, just like Livermore said, right? You need to convince, drop tips, leak news, leak whatever, talk. Expand the communications. I've got the inventory. I need people to buy it. Let's pretend we can, not even pretend, let's talk about it. Let's create these narratives. Okay, done. In order to buy and sell huge quantities of stock, exchange members will seek new ways to enhance their sales techniques through the use of mass media. Well, the mass media techniques have only grown significantly. I mean, there's a million outlets there now, and there's a bunch of freaking noise. In order to employ ever-increasing financial resources, specialists will have to affect price declines over increasing dimensions in order to shake out enough stock. Yeah. That's why it's hard when laggards are lagging, and they're trying to accumulate potentially. Stuff gets drug in the dirt before it rises, or sometimes it just chops. I mean, keep in mind, shaking out enough stock can also be chop, right? Think of like gold long term. Shake all of those weak hands. Advances will be more dramatic on the upside to attract public interest in order to distribute ever-increasing accumulated inventories. If the market makers are accumulating inventories, yeah, that's what they do. They're going to try to what? Attract more public interest. They're going to continue to say the market's going higher. The best advertisement for higher prices is higher prices. Always. Again, the most active stocks will require longer periods of time for their distribution. Apple. The leaders, the market takes time. The economy will be subject to increasing dramatic breakdowns causing inflation, unemployment, high interest rates, and shortage. Yes, these are the issues. How do you interpret this differently? Like, what do you think? Do you not think that within the game, again, they're not playing the game minute to minute. You have to remember that, Herman. They're not playing the game minute to minute. They're playing the bigger board, the bigger chess pieces. Like, think of this as like, I don't know if anyone watches Game of Thrones or House of Dragons, that big table where they got all these pieces and they're just, if we do this, it'll do that. And we do this, and we can do this, and we get the manipulation. All right, we'll call New York Times, call freaking Market Watch, call Motley Fool, call Alpha, let's try this, and let's do that. And okay, we got to get this. That's how I would be manipulating the markets. And if that was your full-time job, I don't feel like that's a hard thing to do. Doesn't sound that hard, actually. I feel like me and 5 guys smoking joints all day, drinking beers, could sit around and like create the narratives. I mean, it's no different than like WWE. Is it really a sport or is it entertainment? I mean, that's the same thing. Trading. Is it really is it really that difficult, or is it really that hard if you're emotional? Well, again, the strings of emotions are easy to pull. Get the action to go in one direction. People start doubting the trend. Well, then you rip it right back. Again, people don't realize, like, 6.5 hour trading day, a lot of it is chop. A lot of it is chop. All right, good conversation. Again, I mean, I just, what evidence do you have out there that the market makers and the operators aren't always winning? Remember, it's a zero-sum game. If 95% of traders lose, who's winning? It's that the picture you're painting is very dark. I'm trying to think of the way the system can break. It's like the U.S. debt, fiat money. At some point, it all burns and gold standard is reintroduced. I mean, is a casino a happy place? Are bookies happy places? Are racetracks happy places? I mean, I don't know what point of mind you're coming from, but that's absolute insanity. The market's meant to take your money. Again, they can't steal it from you. You have to put it out on the line. Someone's taking your bet. I mean, if I'm winning, you're losing maybe. It's a zero-sum game. That doesn't make any sense how you can think that it's not a dark game. Or, I mean, not even dark. I mean, you're willing to take on risk. That's mind-boggling to think that somehow it's not people who not try to take advantage of the game or create structures that put the game in a position to take the most amount of money from the most amount of people. Just like think about every casino. They're always trying to find ways to make more money. Do you not think the markets are the same thing? Then I don't know where. Again, read the Livermore book. Literally, bucket shops. The whole market in itself started as a casino game where people would be fleeced 100% of their paper bets. 100%. That was the goal. Come in there, they bet on something getting over 135 by the close. At the last minute, they would drop it. Again, I don't know how long you've been trading. Shit, you could be trading for 20 years. I don't know. And I'm telling you, it's not dark, light, gray, whatever. It's a fact. If you're trying to win, it means you're taking someone else's money. Don't be naive to that, because it's a zero-sum game. If I buy a stock, that meant somebody sold it, took the other side of it. If I buy an option, someone wrote it. It's not I win, we all win, high five. Yeah. I'm trying to think of a way the system can break. It's like the U.S. I mean, again, you're betting on the end of the world. Betting on the end of the world has never really been a great bet. Now, again, how it pivots and how things change, I mean, yes, you can bet on that. But trying to bet on the end of the world is like, it's undefeated in how wrong it's been. That bet has always been the sucker bet. That is the absolute sucker bet. Now, position around how volatility and restructuring of things, yes. But to believe the world's going to collapse, and even, I mean, how many world wars? I mean, the markets didn't completely collapse. War is actually bullish because companies start doing better. They're able to have like unlimited demand. Debt implosions. Do you not think at some point then, if debt implodes and denomination of dollars becomes worthless, like stock companies are going to make a ton of money? Look at the Argentine stock markets. Look at Venezuela when they blow up their currencies. The markets don't go lower. They go actually a lot higher. So again, I don't know what your background is, Herman, but I'm not trying to be mean by any means. It's just I don't think you know all the mechanisms to what's going on. So you can either get mad at me for talking about it or not. I'm just trying to inform you. Betting on the end of the world has never been a good bet. Now, again, you can make a little money on it. Again, I'm a bear. I'm a longer-term bear, but I'm not sitting here all the time going bearish, bearish, bearish. No, it's a bear market is a trader's market. We talk about that all the time, and it's just the last move is the down. Is this clear? Anyone listening, clear? Like, does this seem so obvious, or is this confusing? If it's confusing, I'll clear it up because I think it's clear as day. Okay, well, I'm not constantly bearish either. But what you're saying is pretty naive. The market's a dark place. No, is a casino a dark place? I mean, you're willing to step in and put your bet down to try to take the casino's money. Is that dark? Oh, but the market's not the same? No, bull crap. It's exactly the same. You're making a bet trying to win. That is very naive to think that somehow it's not, I mean, it's not fair or not right or whatever. I don't know. I mean, there's a whole board of people out there who believe the markets are unfair. Go to Wall Street Bets. Market's rigged. No crap. To a extent, it is. You're missing the point, Herman. When you trade profitable assets, real positive growth, cash flow investment, yeah, but you're not missing, like, I'm done. Like, there's nothing really to say. Again, how many times? I mean, Cisco's been around since the peak in 2001. Their cash flows have been great. Investments, great. Dividends. The stock's gone nowhere. Well, how come it doesn't go anywhere? Okay, well, now Dan, you're talking about something different. Again, my point being is, like, you're creating these opinions of belief on whatever you want to believe in. It's like, do what the market's going to do. But here what the thing is that it is an absolute zero-sum game. The market makers are the ones trying to convince you to buy Tesla at 1,000 times future cash flow and telling you to hold it forever. The only stock that I've seen survive all of this crap is ExxonMobil. Well, everyone always needs oil. But is someone going to always need Teslas? Are they always going to need Apples? They're always going to need A, B, C, D, C. Is it supply come from higher prices? Yes. Once things go up in price, supply comes on the market. Demand are equal. Next thing you know, prices come down. I mean, again, like, what planet are you on to teach you how the markets really work? Now, again, long term, yeah, they don't want you to. Yeah, that's the difference. That's a totally different thing. Because now you're just betting on the wave of how it moves. Well, you better be in a bull market because then you get up moves. But even then, there's stocks that don't do well in up markets. They peak out. Think of 3D stocks. Think of SPACs. Think of whatever sector. I mean, Roblox. I mean, how many names have the money rotated in and out? Once the market makers convinced enough people to believe in certainty, they pulled out. They manipulated, they unloaded their shares. Oh, but it's not rigged. Okay. Buy a stock that loses momentum and hold it for 20 years. And tell me how fun that is. Oh, but it has great cash flows, Dan. I don't give a crap. Oh, but buy the dividend. Okay, well, guess what? Once the momentum goes out of a name, I don't want to hold it. I'm not in to babysit. I fire the employees that don't perform, and I move on to the better stocks. How do you find the better stocks? Stocks that are holding up in bear markets. I talked about the commodity bull market that is absolutely coming out of this. I mean, this conversation is interesting, but I think it's from naivete. It'd be like me talking to you about your job. I think you might know a decent amount about the markets, but if you're reading the news for your information about how to trade, that's like me asking the pit boss how to play the casino game. Yeah, this is how you play it. I'm just going to give you the basic understanding of the game. Good luck. They're not going to tell me how to win. Oh, hey, bookie, what do you think is the best play out there? Oh, you should bet on that. Okay. Hey, casino, what game should I bet on? Man, it boggles my mind to think that people would even believe that for a second. And again, I'm not trying to be mean. It's just like, what the... I go to the news and the headlines to try to figure out the market. Good call. Wrong. Hey, bookie, what's the best game to bet on this weekend? I've got $1,000 burning a hole in my pocket. What should I take? You don't think people are taking your bets? Your broker is literally taking your bets. You hit enter. They are filling the order. Don't ever forget that. Good conversation. All right. Any other questions? I'm going to wrap this up. I think these topics are hilarious to me because, again, it's like, I mean, if you just know a surface amount about the markets and you have beliefs, it doesn't matter. It just always goes back to that. Your beliefs don't matter. Oh, I read this. Well, great. I read Bitcoin's going to 100,000. It didn't. I read gold should be at 5,000 a share. It didn't. Oh, but I believe... No, trade the evidence. Understand the market is trying to convince you of things that aren't. And it wants you to do things you shouldn't when it is about to move. It gets really that simple. Oh, but the market's not omnipotent. No, it's not. But it's not playing the game minute to minute. It's playing it day to day, week to week, month to month. At the lows, no one is going to want to buy stocks. That's how a bear market ends. Everybody's like, damn, stocks ruined me. I don't want any. At the highs, everybody wants stocks. Everybody was paying 1,000 times earnings for Tesla. Everybody's paying up for future growth that was already priced in. Feds go unlimitlessly. They literally are saying we're not going to buy stocks anymore. Red flag. Red flag. When the feds are like, we're not going to own stocks anymore. Wrong. Get out. Run. Does this make sense? I hope this makes sense. Because again, all it takes is one person to figure this out and I'll be happy about it. Because this stuff is so hard. But when we bring our beliefs from the crap that you read out there, I mean, fin twits, stock twits, shit twits, it's all crap. I even remember in the 90s, y'all don't know this, like literally the Yahoo Finance message boards, working in brokerages, we literally would get in there and post to pump stocks. You don't think this happens all over the internet constantly times a billion now? Hey, look, go to the Yahoo message board. Check out, I think it was like, you can pick a name of the stock. Nortel. Yeah, we want it to pop. Let's post some like really positive information on it that no one can validate and no one knows who the hell we are. It happens. All right, well, if I don't understand what you're saying, then I don't understand what you're saying. So let's just end the conversation. Not a problem. All right. Any other questions, thoughts, charts? Someone was just saying on the message board, SPY bottoming or buying the dip. Let's take a look. Let's go to the videotape. The market's so dark. Ooh. Ooh la la. I like it. We have a support resistance spot, clearly. We have a doji. We have a doge. Look below it. All right. I mean, I gave you a good reference point. Now, here's your 10 minutes of bliss trade. You need to see what to confirm it? You need to see over 384. Now, it sounds like a big range, but it could go chop, chop, chop. I like to see higher highs and higher lows for sure. But so you can get this kind of action. Like you want it, and then you come back. I mean, this is where the markets get so crazy after hours too, though. But let's go and let me see if better example. Okay, just from failing at the high parts. Man, that went in. This is a lot of after hours crap. Let me see. You see this sometimes off the lows, right? You get like it looks like it's going, and now I know this is after hours, but the same kind of thing. Like, and then it comes right back. Choppy top. It makes sense, but here's the hardest thing, Laura. If you're looking at it right now, and this is why I kind of said I'm just taking the days off. Clearly, the 50 period on the 10-minute made some reason for it to hit and fail. I would use this as your reference with a tight stop. This is where you can buy anything with stops, right? You know, all right, get in, get out. You wouldn't want to chase it. Now, again, if it straight line moves off the bottom, it's probably some sort of news. Good luck. You don't know. But if this is a left-right combo, big red, doji, it should be a big green. Well, if it's not a big green, what time is it? Yeah, the 10 minutes about the paint. I would wait for the chop. And the best way, honestly, to confirm it is to buy near the lows and have stops. If your stops get hit, you're gone. And if you can get over 383.70, that leads to the next point at 384. If you get over 384s, you can ride higher. But let's be honest, like we have to think about like, all right, what would the market maker want? Let's not think about what we want, right? If I'm the market maker, I want the market down in front of the GDP, correct? Well, let's get some people to buy it and then bring it right back down later. This is where I think it would be a short-term trade. And maybe we close at 384 or 385. Maybe we close at the lows. I don't think we'll close at the afternoon lows here. It'll probably be somewhere, again, I mean, and 381s, meaning the opening lows, I don't think we close there. I think somewhere in this area. So it might not be a trade where, personally, I would take because I don't think there's a lot of meat on the bone. Does that make sense? Like, yeah, it could pop $1 or $2. But it ain't going to the moon. I highly doubt the market is going to close over the 50-day screaming into the GDP data. So that's where it's like knowing when to lay off a trade, right? Like, well, all right, well, do you want to scalp for a point? Go right ahead. That's your choice. You can do it right here. It's easy with a stop, right? You buy at 383 area. You take your point. Cool. But is it actually going to lift off until the GDP data? Probably not. And again, if it does, that it's probabilities. Like, what does the market maker plan on doing here? Well, we know the first dip off of the highs today. We always talk about the first drop or first pop off a high or low gets bought. Okay, well, how high? How high? I mean, watch the intraday action. It's just, this is the problem with day trading all the time, is that you were playing with fire in front of unknowns, right? You got the earnings, GDP. Good questions. Good questions. Or good thoughts. All right, I'm going to let y'all roll. Please do me a favor and really start thinking about how the market makers work. Not how you think the market should be. Not, oh, I think the market should do this and cash flow that and get it. No. Think about the person taking your bet. Think about it. If you're in business, you think about what the market wants, not what you want. It's no different. Like, choose your profession. You're trying to figure out what everyone else wants, not because no one cares what you want. Market doesn't give a crap what we think. Oh, my belief's that? No. I'm trying to figure out what the market wants. What takes the most amount of money from the most amount of people? Just like when they move the lines in sports games, just like every casino game, it's all meant to take your money. You know how you have to be able to vary your bet to know how to win in casino games. We know that. All right, hope that helps. I appreciate y'all. Please be safe out there. All right, peace.